There might not honestly be anything worse than investing into a higher yielding stock or ETF that's going to offer you potentially say 8%, 10%, 12% yield, but having your original investment decay lower and lower in price over time. Because although a 8% to 12% yield is obviously attractive and monthly income is awesome too, none of us want to lose money on the original investment also over time. So in this video, I'm going to make it very simple. I'm going to share with you guys 7 different ETFs that offer north of 8%, 9%, 10% yield, but have not done this, have not decayed over time, and if anything, have went up substantially. So if you want to see 7 different high yield ETFs that have not decayed whatsoever, make sure to stick around, drop a like down below, and let's go right into the first one. If you are a dividend investor who wants to level up your portfolio, you need to be tracking your dividend income consistently. And that's why I created the perfect dividend tracker that I've used to scale my dividend income up to all-time highs over the last year. Now, along with this dividend tracker, you're also going to receive my A to Z dividend investing ebook, which shows you how I personally started from $0 several years ago to now where I earn over $7,500 per month in dividends. So if you want this tracker and the ebook, go to the first link down below in my description and grab it today. The first ETF that yields around 8% and has not decayed at all over time but has grown is one of my favorites. It's an oldie but goodie, JEPI, or the JP Morgan Equity Premium Income ETF, which seeks to deliver monthly distributable income and equity exposure with less volatility. Now, JEPI buys into the S&P 500 for the most part and then uses a discipline option overlay strategy that implements written out of the money S&P 500 index call options that seek to generate monthly income, and this ETF historically has done exactly that. Now, JEPI might not offer the biggest yield or the biggest dividends every single month, but they have been somewhat steady, anywhere from 30 cents to 40 cents pretty consistently over the past several years. Now, along with that, very important, especially for the context of this video, JEPI on the max time frame is up 19.6%. So if you take into consideration JEPI's 19.6% over the last almost 5 years, it's nothing all that impressive, but if you include all those dividends, JEPI's total return is very healthy and is somewhat kept up with the general markets. Another ETF that offers a massive starting yield of around 11 or 12% on the 30-day SEC yield, but also has grown significantly over time, one of my other favorites, JEPQ, the JP Morgan Nasdaq Equity Premium Income ETF. Now, JEPQ is an ETF a lot of you guys are probably familiar with. I say that because this ETF is very, very popular across income-oriented or dividend investing investors. Now, this ETF seeks to deliver monthly distributable income and NASDAQ 100 exposure, but with less volatility. So it's very similar to JEPI, but instead of the S&P, with this one, you're getting NASDAQ. Now, with this, of course, it also implements the written out of the money option strategy, but again, in this circumstance, we're talking the NASDAQ 100. Now, JEPQ has been able to offer upwards of 35 to 50 cents every single month over the last 12 or so months, making the yield a little bit higher than that of JEPI, but still somewhere in that range. Now, JEPQ's growth has been insane on the 1 year, up around 18.58%, and that's not even including the 12% 30-day SEC yield. Now, in the max time frame, JEPQ has also not decayed. It's basically grown significantly ever since December of 2022, up almost $20 from the most recent low back then. So this ETF, at least so far historically, has offered investors zero decay on their investment, but also has offered consistent massive dividends every single month. Another ETF that's offered upside but also massive payouts is SPYI, or the NEOS S&P 500 High Income ETF. This is one of my favorites and a large position in my personal portfolio. This ETF has a distribution rate of around 12.1% and offers a similar strategy to that of JEPI, meaning that it invests in the constituents of the S&P 500 and also utilizes a data-driven call option strategy. But different than JEPI and other ETFs, this ETF seeks to do so very tax efficiently by utilizing SPX index options classified as Section 1256 contracts, which are subject to lower 60/40 tax rates. Now, also SPYI is a little bit different because at times it might sell, of course, but also buy SPX index options, which means there could be some upside potential when it comes to investing into SPYI. Now, this is going to be crucial, especially because we've seen in previous situations where a lot of these income-focused covered call style ETFs might pay out a 10%, 12% yield, but they decay over time. Now, at least so far since SPYI has been trading, this is only since August of 2022, keep in mind. The ETF is up in the green 8.43%, and keep in mind that's not including those 12% per year dividends. Also important to mention, SPYI pays out a very consistent payout every single month, somewhere in the 49 to 52 cent range, at least is what we've seen so far over the past several years. So all in all, another ETF that at least historically has paid out a massive yield to investors and has grown over time, which has been amazing. Another ETF that's done all that and more is QQQI, the NEOS Nasdaq 100 High Income ETF, which is very similar to SPYI, but you guys did this one utilizes the Nasdaq 100 instead of the S&P 500. Now this one, because it has a little bit higher beta, offers an even larger distribution rate at around 14.17%, does the same thing as that of SPYI, but of course does so on the Nasdaq. Now in the max time frame, QQQI is only up around 7 or so percent, and this is since the beginning of 2024, so even with that 14% yield, this ETF still has not decayed a single bit and is up almost 7% on top of it. Now a few more, we're getting into some of my favorites now. If you guys are still watching the video, make sure to subscribe if you guys like stuff like this. But the next ETF that is not only not decayed, but also has grown a lot over the last year or so, but along with that paid out a massive yield, is the Goldman Sachs Nasdaq 100 Core Premium Income ETF, or ticker symbol GPIQ. Now this ETF says it seeks consistent monthly distributions, does so with lower volatility, and is a diversifying source of income. Now what I like about this ETF and what sort of sets it apart from the other cover call style ETFs is that it utilizes the Nasdaq 100 like many others, but with this one they dynamically sell call options, allowing for participation with rising markets, which means when the Nasdaq 100, let's say, moves up a lot in price, this ETF, at least in theory, should have more upside potential. Now even with all that upside, this ETF pays out a steady 40 to 43 cent payout more or less every single month, which is around a 9 or 10% yield. Not to mention on the max time frame, GPIQ is up 28.55%, and this is only since October of last year. So this ETF sort of gives you a perfect mix of upside and also income potential from day one, making it one of my favorites across the entire markets and making it an ETF that I'm trying to build out a position larger and larger as of right now. The next ETF that does all this also is GPIQ's brother or sister GPIX. It's the same thing, only this one utilizes the S&P 500. But once again, because it dynamically sells call options, allowing for participation on upside, this ETF is up 29.53%, and also on top of that offers around an 8% yield, which is not bad whatsoever, making GPIX one of the best performing S&P 500 income strategies that I've seen across the entire market, at least in this time frame. Now last but not least, we're going to get a little bit crazier with this one, ZVOL or ZVOL, the Volatility Premium Plus ETF. This is an ETF that offers a 31% distribution rate, but along with that, the ETF has grown significantly since inception. Now this ETF is a little bit different than the other ones we talked about in today's video. It basically shorts the volatility index and allows investors exposure to that, along with a massive amount of income from day one. Now the amount of income, like I said, is huge. 48.5 cents every single month has been paid out, for the most part every single month since inception. And even though ZVOL is relatively risky in my opinion because it shorts the volatility index, which means if there is massive volatility, this ETF could be in some big trouble. At least since inception, this is since around April of 2023. The ETF not only has paid out 48.5 cents, like I said, every single month for every single share that you own, but also it's up 35.44%. Now just as of May of this year, it has been dropping a little bit here and there, so this one's going to be interesting to watch over the next, say, year or so, and I do own a small position in this one just to play around with it. But regardless, since inception, this ETF is a very high yielder, obviously, and at least in the max time frame has not decayed whatsoever, but of course we're going to have to see what happens from here. So there we have it. Those are 7 different ETFs that all offer an initial high starting yield, but at least historically have offered all a positive total return and have not decayed in price at all. Now again, when it comes to investing to higher yielding options, that's probably one of the biggest things you have to look out for, because income potential from day one is great, but if your underlying investment's going to dive into the ground, that's something that we want to stay away from. But now lastly, before I go, I want you guys to comment down below, what's your favorite higher yielding stock and or ETF that offers a ton of income from day one, but has not decayed whatsoever? Let me know in the comments down below. If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.